Hello and welcome to another update video. As we head into the weekend here with Bitcoin, we want to take a look at the most imminent wave count. And yeah, what is Bitcoin up to? So, zooming out, overall what you need to understand, we're still expecting lower lows for Bitcoin. Now, this is not necessarily super high probability. I always have to say that, At the moment, there's still a lot of uncertainty in the market, and you can see that Bitcoin is holding the 19.4K level. Yes, we dropped briefly below it, but a wick below it, as I said before, doesn't really change it. This level is the 78.6% Fibonacci retracement level, around about 19.4K, maybe a little bit higher, but I need to adjust here the things correctly. But overall, what this means is that normally if we say, okay, we have a bullish wave pattern here, which is still possible, we could still have a bullish scenario, then we would have to count this as a wave 1 and this here as a wave 2 correction. And in a wave 2 correction, we should hold above the 78.6% Fib level. And as long as we don't break below that, we still have the possibility of a bullish count. It is improbable, absolutely, and it would only become my preferred scenario if we move above $22,100. That is, if we measure it from the other side, the 78.6% retracement to the other side, so measured from the other top. So that would then, on the other hand, make the bearish case less likely, okay? It is just what it is. So, but these are the key levels to watch out for. And if we drop below the 19.4K level, which we haven't done yet, you can see how relevant this level is again. These support levels measured by the Fibs, because we touched it and then retraced. So it looks like we came below it once, but only really, really briefly. Here, of course, we did, but that was disregard that. It's all about what happens here now. These levels, And we recovered from that. So at the moment, have an open mind, still with Bitcoin, it is needed. However, overall, there's quite a bearish overhang over this chart. We expect still lower prices. That is the case because of the overall wave pattern, because we dropped below the 18.9K level here, which invalidated one of our bullish counts, which was here, this swing low. We took it out. We had a 1-2 setup here based on the Elliott waves. This was invalidated. This just makes the overall bullish count very unlikely. Very unlikely. It is still possible, of course. Everything is possible at any time in markets. But there are certain highly likely scenarios. And for me, highly likely is now that we go down. But we can't rule out higher prices. Please always understand that. There is no certainty in these markets. There isn't. In no financial market there is certainty. But there are probabilities. There are typical market flows and market movements and wave movements that are playing out. Okay, so the overall wave count would suggest that after we finish this corrective move, which started at the June lows at 17.6K WXY to the upside, we came down in an impulse. In a 5-wave move. 1, 2, 3, 4, 5. And again, there are various ways of counting this. I decided that this one is for me the most likely one, the best count, that we then moved up in a wave 2, A, B, C as an expanded flat. I think that is the best way to count it. It is possible to count all of this as 5 waves. We just have to have another layer of waves in there. And that would suggest that we have then an A, B, C coming. That's possible, but this is unlikely. This is unlikely because the overall chart suggests bearish. And if we have something like that, in that we do, let me just show you once more. A, B, C, and then come down. This is unlikely. Do you know why? Because if we now said that this was a wave A and this was a wave B, we would be expecting a wave C to the upside, wouldn't we? So to complete the wave 2. So basically, if you understand that, it would mean that wave 2 will be finished here. And that, I just try to be clear here, that this was then a wave A, this is the B, and the wave C would still be coming. But you can see clearly what the problem here is. If you now expect a move up in a wave C to finish off the wave 2 and then come down, this becomes unlikely because the wave 2 would retrace probably. We can measure that, we can get an understanding of the target. So you would be looking at getting into the area 23.6k and possibly even, that's the more typical target for a wave C, to do the 1.618 extension. Yeah, because we're looking at the flat pattern here, because the wave B retraced quite a lot. 26.2k, but then you invalidate the entire downtrend. So if at all, you would look at the 23.5k level. That would take us roughly to the 78.6% fib level, but this would have to be then a running flat pattern. A, B, no, it wouldn't be a running flat, but it would take us above that 22.1k level. As I said to you, above 22.1k, due to the structure of the chart, the bullish case gets more likely. So in a bearish scenario, now to expect a move to the upside in a wave C, now again, we can't rule it out, but it's less likely, just based on the fibs. Okay, so for me, this is the best count. Again, there are different ways of counting this. For me, this is the best count, and based on this count, we are heading down in wave 3 next. This would be the expectation, or we are already in wave 3 to be fair. Yeah, in yellow. Within wave 3, and this is what is now interesting. So basically, this yellow wave count will finish off the bear market correction, ideally, or it has to. Otherwise, good night. Yeah. So if we are in this yellow wave, there are a couple of possibilities. A yellow wave 3 here has 5 waves. It's an impulse. And there is one possibility, and I go to the 1 hour chart for that. This is outlined here in white. This is the short-term wave count, where we would say, okay, this is the white sub-wave count of yellow wave 3. In that we said, okay, wave 1 already done, wave 2 already done, and we're already heading down in wave 3. And that we completed possibly here just a 1, 2 already of the wave 3. So let me move that aside. To be fair, I think we'll I'll leave that in there. This is, for me, to be honest, a highly probable count. Yeah. That the wave 2 was already finished, and it just represents the bearish overhang over the chart. I mean, look at this. I mean, this was the best Bitcoin could do in a wave 2 retracement. It just is the weakness currently going on there. Yeah? That's the best it could do in a wave 2 retracement. It was not even retracing to the 23.6% fib level. That is weak, and that is not what I expected. I expected a stronger wave 2 retracement because this is highly untypical. But as you can see, always have an open mind and always expect the unexpected in these markets. Yeah, and that just suggests we are heading further down. Yeah. So in that scenario, then we'd be looking at more subwaves. Yeah, and could say that we have here probably already seen a 1, yeah, not even that we might have already seen here the wave 1 of the wave 3 in white. This might be the wave 2 in wave 3 in white, 4, 5. So that this is going to play out, yeah? So that means that we already had a bit of a recovery here. I mean, this recovery could get a little bit higher. but it shouldn't exceed the 20,200 level. If we now go above 20,200, it would suggest that we haven't seen white wave 2 yet. Okay, so above 20,200 you would expect a larger increase, because again the 20,200 level is the 78.6% FIB level, and a wave 2 in blue above that level is just getting unlikely. So we would have to go back to that alternative here and say, okay, maybe finally we are going to see a larger retracement. But that is the key level, 20,200. Unless we get above that level, I expect further downside. So, and that this move is nearly finished then. Yeah, maybe one more move up to 20,200, and then we could have another sell-off over the weekend here in a wave 3, 4, 5, finish off the wave 3 in white. Target for that suggests that you understand the downside potential of this. In the best case for Bitcoin, let's say in the least bearish case, we'd be looking here at something around 17,500. But if you get to the more typical 1.618 extension, we'd be looking at 15.6k for that wave 3. So I'd be extremely careful on the long side here at the moment, extremely careful. And yeah, the other alternative is this one, that we say, okay, wave 1, I'll make that wide just to make that clear. Wave 1 was only finished here, and we are going to see a larger retracement, but only likely above 20,200, and that should stay below 22,100. Otherwise it will get more likely that we're in a bullish case, and overall not much would change then. If we see a larger wave 2 retracement, the overall downside potential will be not that low. Okay, it will not be that strong. But that's my view about Bitcoin, so hopefully that makes it clear. I think these are the two most likely scenarios. Pretty clear at the moment to me, and also what is clear are the not that this necessarily has to play out, but clear to me are the points of invalidation, which is not always the case at the moment. I think it's a lot of clarity in the chart here. Two very clear scenarios, both to the downside, clear invalidation point above 22,100. Well, not invalidation, but basically inflection point, decision point where things could be changing, and the 22,100 level. And of course, confirmation that we're heading further down would be obtained below the previous swing low at 19,000. Yeah, roughly 400. It was a little bit lower, 19,340. Okay, and that's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.